evening. Let's cover MTW. This is the chart since the IPO. This has been a terrific long-term investment. The IPO was here at about $6 or so, and it is at 76 now, about 14 years later. Over the medium term, you can see the medium term trend is bullish, and the 200 days moving average has been providing strong support here. Look here, this very nice buying opportunity, and I would be looking technically to buy it if it eventually touched the 200 days moving average again. But the stock is near a new all-time high now, so very bullish. Over the short term, we have the same picture. Here on point one, the company released fourth quarter earnings, and they disappointed analysts here, but here on point two they raised guidance, and we had another jump. Current guidance, I believe, is 410 to 420 on a earnings per share basis for calendar 2007. So technically the stock is bullish. In terms of the fundamentals, we'll jump right away to my evaluation model. Here we have these yellow lines are known facts, the white lines are my estimates, and these dark yellow lines are calculated automatically by this model. So the initial share price is 76.55, it is the current market price. Initial share count 62.36 million shares. I expect a dilution of 2% a year going forward. This has been the historical recent history average. Let's check, where do I have it here. If you go to this MSCN Money link, which is a quite useful link, you'll see here the share count over the years, and over the past 3 years it rose modestly about 2% a year, so I consider it 2% a year going forward too for the next 3 years. Initial revenue, this is the last 12 months revenue, which was $3.16 billion, and revenue CAGR, this is my estimate, and I consider revenues will grow about 21% a year going forward. This is the last 10 years average, so revenue CAGR since 1997 was 21%. I expect that to continue. Analysts expect it to, but perhaps not so optimistic. A bit their expectations are a bit lower than mine, than the historical average. And this gives me a final revenue for 2009 of $5.6 billion. Initial net profit margin, this is the 2006 net profit margin, was 6.14%, and I expect this to expand a bit to 7.5%, which was the Q1 2007 net profit margin. And this gives me a final net income for 2009 of $420 million, and earnings per share of $6.35 per share, of course. Earnings per share multiple estimate, this is also my estimate, 19.39, which is the industry average. You can see here on Yahoo that the farm and construction machinery industry average P/E ratio is 19.39, which is what I have in my model. And computing all this, I expect MTW to close 2009 at $123.10. And this means a share price compound annual growth rate of 17.2%. But since I look for at least 16%, which is double the market average of 8%, this stock is just barely attractive, and I would sell it at 78.86, just a bit above the current market price, and look for stocks with more potential, because if you're looking to get a 30% or 30 or 40% average annual return on your investment, you can't buy this stock, which is expected to rise just 17%. But well, I expect MTW to outperform the market, but not terribly so. So on a 1 to 10 scale, I give it a 7. Thanks.